Well, g'day there, everybody. Thanks a lot for joining me as at this Tuesday afternoon market recap. I hope you are doing well, no matter where you are located around the world. It has been a little bit of time since the last public YouTube update. I am here, of course, to present you what is going on at the current juncture in the US financial markets. First of all, however, I did want to point out that this week it is going to be an abbreviated week's worth of trade. This coming Thursday, it is the US Independence Day holiday. The markets will be closed. So we are looking to see essentially volume trail out of the market really for, I guess, the second half of Wednesday, especially for what remains, that being Friday, when it comes to trading the US equity markets. Now, again, collectively across the board, we are still looking at these markets being on the precipice of breaking out. The S&P 500, again, still sort of is at the forefront, or at least it is leading the other two markets, that being the Dow Jones and the Nasdaq. You can see we're pushing on up around that 2,971 continuation entry, and that is essentially that of a new all-time high on the S&P 500. We are still below that of Monday's candlestick, and what we are seeing again is a theme. Essentially what is occurring is that on Friday we're seeing closes, whereby on Monday we are seeing gap ups. Now, as it stands, resistance is still technically holding. I do understand that the S&P again has broke, albeit temporarily, to a new all-time high. However, if you have a look at the other two markets as well, the similar story is starting to set up. We did see again the original gap up on Monday, which essentially closed down, or at least it traded down throughout Monday's session. And then here we are on Tuesday, whereby the markets themselves are largely unchanged. You can see the Dow Jones Industrial Average very close to the close on Tuesday is up just over 10 points anyway. So again, an immaterial move. Really Friday through Tuesday as it stands at the moment. The Nasdaq, again, you can see this open window between that of Friday's close and where we closed. Even on Monday, we got the original gap up, and again, intra-session, we traded down. But the good news is that these markets are still holding up very close to their all-time highs, with the S&P 500, again, technically even on Monday, pushing to a new all-time high as well. So these markets are still primed. They're looking good. It's just a question, or at least the question becomes, like I have proposed in the past, whether or not this resistance area is going to hold, and whether or not we are, if I can actually change my colored pen drawing illustrative tool, whether or not we are going to see another oscillation, another wave rotation back down to this rising area of support, which would be probably the final sort of buy opportunity at the best price, so to speak, on the markets, or whether or not right now, all right, we are going to see that of a continuation off from what appears to be that of a bull flag. So either of these two options are sort of the trajectory, at least, upon which these markets are going to take at the moment. We still don't have definitive, or at least a definitive answer across the board collectively from the US financial markets. We are looking for these markets to move back into synchronicity with one another. At the moment, there is a little bit of sort of divergence between them, with the S&P freshly up at the new all-time highs, whereby the Nasdaq is still failed at this point to actually break out above both, or at least the May swing high, the April May swing high, and also the same is true for the Dow Jones Industrial Average. You can see that we did temporarily push above it. This is going back to the 21st of June over here with this shooting star candlestick, but we are still primed below that of the technical breakout on my screen. You can see if I move this trigger over just a little bit, it's coming in at 26,924. We flinched again. We got very close to it as at Monday. We didn't actually push above it, and we are still, again, treading water as at the close on Tuesday. So very simply at the moment, these markets still on the macro, the largest time frame, they are still macro bullish, okay? We're still flirting with this resistance area, and it's whether or not we're going to see the definitive break this week, maybe potentially next week, or whether or not we do see that secondary wave rotation as we draw closer, if I can zoom on out and show you this, towards the apex of what appears to be an ascending triangle. The good news is that an ascending triangle, generally speaking, 60% of the time it will break in the direction, right, of the prevailing trend. That trend itself is up. And the reason, just to show you this, is because when you think about the buying support sort of underpinning the market, you can see the collective majority of actual market participants are willing to jump in at higher prices, and that is essentially the pullback. So this is the Q4 pullback over here, right? We established that of the macro support down at 22,000. We saw the very strong rally back into the peak in April and May. We saw the bloodbath, so to speak, of May, whereby the buyers, they didn't wait for 22,000. Instead, they jumped in at 25,000, which is now providing what we call the intermediate trend support of this market moving higher. Again, June, it was the best June, I think, since 1938. Very strong June, pushing back on up to these recent all-time highs. This, again, is the chart of the industrial average. And again, for the third time in this recording, it's a question of whether or not we come back on down for another wave rotation to set up essentially that third higher low. before we move closer into the apex of this triangle, whereby we are going to see a definitive move one direction or another. I still assume at this point, based on the technical analysis and also the fundamental analysis of the market and the US economy, that we are going to see again a continuation and a break to the upside, whereby it will linger not only for the second half of 2019, but well and truly into 2020 as well, by my estimations. And you should be, relatively speaking, quite excited about the opportunity that is before you if you are still positioning yourself and accumulating positions on the continuation of this trend higher. All right, so we're going to follow this very, very closely. It does look as though we could be sort of establishing that of a very quick double top, which may again present the opportunity to buy back down here close to the 25,750 on the industrial average. On the S&P 500, you'd be looking at, well, depending on where we connect with this rising line over here, anywhere above 2,875. This, of course, is only if we see the reversal. Not saying it has to happen, but it is an intelligent decision nonetheless to actually look to actually jump and reestablish, or at least continue to accumulate positions down towards 2,875 if it does play out. And on the NASDAQ, you'd be looking probably somewhere down towards 7,725. The good news, however, is that we do have insurance policies. And when I say insurance policies, really what we do is we set up contingency orders based on price to trigger us into positions, for instance, on the industrial average, if you wanted to trade the diamonds, whereby you'd set the trade up to say that, well, look, if the Dow Jones Industrial Average breaks above 26,924, then enter me into X number of contracts on the diamonds, which will therefore, of course, enter you into the trade whereby you will not miss out on the impending breakout. So we're really sort of sitting on our hands at the moment. Otherwise, you can just take market positions and, temporarily you may have to sit through again another correction, but on the larger intermediate, macro, and also on the very slight sort of minor level, these markets are still primed for the breakout. And again, you should be sitting there if you're sort of net directionally positioned long with a very big smile on your face at this time. Okay, it's coming. It's taken a little bit of time. We're going through sort of the ebbs and flows or jumping through the hoops before we can see ultimately see that breakout. And again, that should be, relatively speaking, quite exciting for you if you are following along with the markets as closely as what we do in that pro analysis class. The CCI is still firming up. It's above 100. The ADX is trying to turn up as well. And this gap, interestingly enough, I don't think at this point in time it's a reversal or even an exhaustion gap. It does look like a continuation gap to me. And generally speaking as well, when you see continuation gaps like we saw between Friday and also Monday on the S&P 500, whereby you more or less see the gap to a new all-time high, generally it is a sort of a gap and go, what we call a measured move, or even that of a continuation gap, which means that generally speaking, you will see higher prices soon after. We don't necessarily have to close the gap in this particular instance, but generally speaking, now that we have created what seems to be that of the third or the fourth retest of this resistance area, depending on which market you're looking at, it makes a lot of sense that we would come on back down and actually retest it prior to continuing in the larger breakout direction. All right, so just be patient, hang in there. The markets are working away. Okay, the sort of the buying pressure is building. It's continuing to build off from this intermediate trend line. And again, even if you were to take market positions, hold on to them. Just make sure you have adequate option expiration. Push them out as far as you possibly can. Of course, always buy in the money as well. And you will be rewarded very handsomely when this market does break out and continue to the upside. A lot of the individual trades at the moment are largely just treading water. Some have moved to the upside, some have pulled back a little bit, but generally they're not really moving all that much. And that's a sign that these markets are stuck up at their resistance areas. You can see Apple there isn't doing a whole lot. It has been profitable for us above 184 and then above 197, most recently 203.06. But we spoke about this over the weekend, whereby you should already have vested positions down at these lower prices. And this is just more so sort of the magnet operating back up to 213. You can see the same is true for Amazon. Amazon just continues to rip higher, 1828 and then also 1896. We're up at 1931. The target on this trade is 1944. So we may actually hit this as at Wednesday session as well. So keep an eye on that, but I wouldn't be looking to actually jump into that. We've got Boeing Airlines pulling back. So this is one of the ones which is pulling back. However, it is retesting this old resistance, this new support. So this 370.65 trade trick still stands. And if we are still hovering around 353, I will update this trigger over the weekend, depending, of course, how the next two candlesticks really round out the week that we currently find ourselves in. Baidu flinched yesterday above 121.73, albeit temporarily. We're still looking at these gaps to close, but this is most likely going to play out only when the markets break out and then they begin to trend. So once the markets do break to the upside, you're going to see collectively, right, all of the underlying stocks, or at least a large percentage of those, just moving in agreement with the market direction as a whole, just for the simple fact that the market is trending, to new all-time highs, and you're going to see a lot of these stocks be carried with the direction of the actual markets as well. Caterpillar is still holding around 135.90. In fact, yesterday we traded up to 139.81. Let me just move this over so you can see this without the actual numbers covering that upper wick. So if you placed your target, or at least your stop, up here, right on the trade, that was a very profitable trade for you. This is going back to the 127.05 entry, the 129.85 entry, and more recently, the 135.90 entry. At the moment, you're either out or you closed out of Caterpillar for a profit, or you still have potentially the entire position or even a portion of that position still open and still profitable. But this was the target, and we did hit it first thing on Monday. So an exciting trade there, very good trade on Caterpillar. I still think it's going to go up to higher prices, but again, it's largely at the whim at the moment of the market and whether or not we see that wave rotation back down to that next sort of higher low, upon which I've already referenced being that of the intermediate uptrend off from, of course, the Christmas lows back in 2018. CVX pulling back again. This is quite good. This is potentially one of my favorite trades for a number of reasons that I've spoken about in Pro. And just because we have a dark long day Morobozu candlestick, it doesn't really change the complexion whatsoever of the trade itself. This is still the accumulation whereby you're going to see ultimately price stabilize over probably a number of months. But then once the markets break, you're going to see COP drifting up high. I'm going to skip over CVX. It's not my favorite trade, and it hasn't been my favorite trade. In fact, a lot of people have emailed in, and thank you for those emails too, suggesting alternatives. And there are a couple that I've shortlisted, and I will speak about those over the weekend in that Pro analysis class on Saturday, but everything is looking good on that. I think we are going to actually rotate Chevron out of the list and make a new addition to the top 12 list. On the left hand side of my screen over here, you've got Disney. And again, I'm not really going into the technical picture, but you can see Disney, it's really starting to at least respect the exponential moving averages, and you can see it's primed essentially for a breakout above 143.83. So pay attention to that. You might actually see that run towards the end of the week, or if not the following week, but it is looking quite good. Google is one of the earliest stocks to move into earnings. A few people have actually emailed in recently asking what to do about this stock. That's fine. But you can see again the formation of what we spoke about. I did put out a video on Google. If it wasn't last week, it would have been the week prior, and I was speaking about the W, i.e. the double bottom, and whereby, we may actually set up that of a lower swing high as well, much like the market, showing, of course, buyers willing to jump in at higher prices, and to really confirm this being an exhaustion gap to the downside and actually reversing the move. Well, you're seeing the very early instance of this. We actually got the gap again Friday and Monday, and we're looking to actually break above 1132. Have a look at obviously the earnings, because we are counting down to that earnings call. So I mean, if you're not in Google at the moment, it might be best just to sit on the sidelines and just follow it, wait for earnings to sort of move at the rearview mirror, so to speak, before jumping in and actually trading what will most likely be a gap trade in the bullish direction. Okay, but again, you don't really want to speculate. You don't want to hold any positions over earnings. The reason for that is because it's largely unquantifiable, and we don't know really what's going to happen in the actual gap direction based on that earnings report, all right, prior to its release. So again, I like to close all of those trades out moving into earnings, and then just reestablish the trades once we have moved through earnings season, or at least moved through the earnings calls for those individual trades. Now we've got IBM again, still popping to the upside, got very close. I mean, we didn't hit it like we did like we did Caterpillar on Monday. But you can see we're pushing up towards 142.16. This is after the 132 entry, the 135 and the 136, all bullish entries to actually close this gap over here. So again, if you're still in IBM, which I assume you are, if you use contingency orders to also liquidate your open positions once you hit your targets, you might actually just want to tighten your stops and place them essentially below that of Monday's candlestick, and just be happy with the profit that has been made really for the month of June. Okay, there isn't a lot of upper resistance on IBM, and it's not one of those trades, for instance, like let me just bring it up here. Boeing Airlines. Sorry, not Boeing Airlines. Let me just bring up the right chart. Disney, whereby we've got sort of free space above this swing high break over here. All right. So a little bit of a different complexion once again, but albeit it is still a pretty tremendously profitable trade there. And the final stock right now is Netflix. Netflix is still coiling. It's still between the upper range, or at least the upper support area, and below the resistance area. You can essentially draw a rectangle around the price action over the past 4 months, even a little bit longer. And as such, once we start to flinch definitively above or below, I assume it's going to be above, you're going to see Netflix essentially price in a base whereby it's going to be used as sort of a stepping stone for higher prices. It's going to be the impetus essentially once we break above the resistance, whereby the pressure cooker is going to sort of overflow, and you're going to see a massive bid into the market for Netflix, right? And we're going to see this propel much higher above 400 up until who knows how far. We're just going to have to obviously move those stops, or at least move our stops with the rising exponential moving averages as that trade progresses. All right. So on that note, everyone, that's going to do us for this Tuesday afternoon market recap. Pay attention to the markets. This is everything you need to follow at the moment. And depending on whether or not we get the definitive break or the rollover, both options, option number 1 and 2, are going to result in higher prices. However, door number 2, which is the rollover, will allow you, if you haven't already done so, if you still find yourselves on the sidelines and a little bit sort of anxious about the market, all right, it'll give you the final opportunity to price yourself in at the best price prior to the breakout if this is not the breakout that we're seeing at the moment. Okay, but anyway, we've been speaking about this for a number of months. In fact, we've been speaking about it since we hit the macro support down here. And really, at the moment, although the market, it has clawed back a lot, or at least the majority of the losses, obviously, if you're thinking about this anyway on a weekly time frame or a monthly time frame, the market itself, it has been in a period of accumulation. And although it is up, technically speaking, close to 20% for the financial year 2019, really we're still at zero because we haven't actually achieved a new all-time high. So from this breakout, right, there's a lot of upside on this market. I'm still considering anyway that the Nasdaq's going to hit 10,000 very easily. We're trading at 8,100 at the moment. And I mean, we're going to sort of use this as the centerpiece really for the industrial average and the S&P 500. But the Nasdaq itself, it's going to gravitate towards that psychological round number. So once we get this breakout, you will have roughly 2,000 points on the Nasdaq to make until we hit 10,000, which I think anyway is a definitive target just because of the psychological component of that round number. Very similar to what we saw in the year 2000, whereby the Nasdaq itself petered out at 5,000 once it finally got there over here on or in the year 2000, the turn of the millennium over here. So again, we're just multiplying that by 2, taking it out to 10. And again, you're going to see it won't be sort of, it won't be exact, or it's not an exact science. It's more of an art and understanding sort of the psychological sort of component of trading and the sentiment, the emotion, which will drive the Nasdaq up to higher prices, whether or not it is fundamentally correct or not. It does lay the platform for a very nice target for these markets, sort of moving further into 2019, but also probably into 2020 as well. All right, if you have any questions, email me. Otherwise, jump into that pro analysis class, and you're always welcome to email me to success@pivotpoint-trading.com. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. Goodbye.